Hey everybody, Smart Silver Stacker here. Hope you're doing well. So, shocking revelations today. The jobs data, well, it's been fake all along. I know many of you are probably caught unaware by this, but it is official. According to the BLS, downward revision released today at 10 a.m. The U.S. economy added 818,000 fewer jobs between March 2023 and March 2024 than they had initially reported. Now, again, this probably is not that surprising. I think we've all been aware that the jobs data and much of the official data comes out of these government departments. The numbers are cooked, have been for some time, but it's beginning to become apparent just how cooked they are. So, this is going to have a big impact on what the Fed does next, and as a result of that, it's going to have some significant implications for the markets, gold, silver, broad stock market as a whole, and also the purchasing power of the dollar. So just a little bit on this revision. This revision is the largest downward revision for jobs data since 2009. And the Hill here says this could fuel concerns that the Federal Reserve may be behind on their rate cuts, which have remained elevated for some time, have caused a number of issues. Soaring U.S. dollar versus foreign currencies, crises in the regional banking system, out of control interest payments on the U.S. national debt, just to name a few. And let's take a look at how gold and silver are reacting today to this news. So silver, once again, in the green today. That is what, the 5 consecutive sessions of silver being in the green, assuming that we close in the green today. And it makes sense because this development should be fairly bullish for the precious metals. That is assuming that we are back to the bad news is good news paradigm. Now, we did get a little bit of a different paradigm when we got that bad jobs number back on the Friday before markets had a major sell-off, indicating that the U.S. might be in recession. But it looks like, at least for now, this negative jobs data is bolstering markets. You've got all the major indexes you can see on the right here. S&P 500 in the green, NASDAQ in the green, Dow Jones in the green. Both gold and silver in the green today, although silver putting on more gains at this point than gold. But the chart for silver, I'm not going to go over this in too much detail. The chart for silver remains incredibly bullish. You can check out recent live streams where I've discussed this at some length. But gold, I do want to look at this chart briefly because this is so bullish. We had gold break out on Friday to record all-time highs above $2,500. Then look at what has happened every session since then. Gold has sold off, dropping below this trend line that it broke out above on Friday. But every day, those sales have been met with significant buying, and the decline has been rejected, which is exactly what happened today. Yesterday, you even had spot gold trading as high as $2,531. So, that's something to pay attention to. And it looks like the gold chart also incredibly bullish. Now, a lot of this is going to depend on what comes out of the mouth of Fed Chairman Jerome Powell on Friday. He's going to be speaking at the Jackson Hole meeting, an annual meeting at which the Federal Reserve delivers a speech on the state of the economy and where they're headed from here. And this is going to be a critical one because, a lot of fear out there right now that maybe the Fed has gotten behind the curve on these rate cuts and that, we desperately need them. So the question now is not, when is the Fed going to cut? It's really just how much. Very likely in September, we're going to see a return to easier policy in the form of rate cuts. And this revelation today that, we had almost 1 million less jobs than we were originally told. And look, that number is fake too, right? The 818,000 job downward revision. None of these numbers can be trusted. And, it really makes you wonder, What would happen to these markets if the inflation data, for example, was revised to reflect what's actually happening in reality? I think that you would see a much bigger interest in safe havens and inflation hedges such as gold and silver. Now, I want to talk about something else that's happening in the silver market, which is of note, and it should be of interest to everybody. Excuse me. So right now, over at SD Bullion, they've got very competitive prices on 90% silver coins. They are today's video sponsor, by the way. That's where I buy my gold and silver. Check them out with the link in the description if you want to buy some gold and silver. But something that we've been discussing is the premiums on junk silver, and this is something that I like to pay attention to. I'm going to pull a calculator up here because junk silver is sort of a bellwether. It's like a canary in the coal mine. The price of junk silver, the premiums on it, tend to react faster than other bullion products to the forces of supply and demand for two reasons. One, 90% silver coins are sort of ubiquitous, constitutional silver, junk silver, whatever you want to call it. This is something that people flock to. It's widely recognized. It's one of the more popular bullion products, and also that there's a limited supply of it. They're not minting anymore. A lot of this stuff has actually been melted down since 1964, the last year it was minted. So it has a very limited supply. And one thing that you can see right now, we'll do a little math here. So $10 roll of junk silver going for $227.92. That's got about 7.15 troy ounces of silver in it. So you're talking about $31.87 for an ounce of silver for junk silver. Now, right now, spot silver here at SD Bullion, $29.79. So we subtract that, and we can see that that is about a 7% markup over spot on junk silver. Now, that number is rising, the markup. A couple weeks ago, we looked at the premiums on this, and it was down under 3%, which was, very low historically. In May of 2023, premiums on junk silver went as high as like 50 or 60% over spot because of the fears surrounding the regional banking crisis. So what this tells us is that there is an interest in retail bullion products that is on the rise right now. That's the trend. More and more people are getting interested in this, and I forecast that the premiums, especially on junk silver coins, probably see this on American Silver Eagles as well, these forms of bullion that are widely recognized and have limited supply, the premium is going to be rising on these as these developments play out in regards to easy money from the Fed and also geopolitical considerations, which we'll do an update on here in just a moment. But first off, let's take a look at this in regards to easy money. So you can see that right now, actually I'll refresh this so we get the latest numbers from the CME FedWatch tool. Yeah, 38.5% chance now following this jobs data revision that we're going to get a 50 basis point rate cut in September. Yesterday, this was at 29%. So you can see, they tell us the jobs market is a little weaker than we've been told. And I mean, how many times was that strong jobs market cited by the president, by Jerome Powell, the chairman of the Federal Reserve, as a justification for maintaining higher rates? Well, now it turns out that was all fake. And the other thing, again, that's fake is the inflation data. So they say that the inflation data is coming down. They tell us that we got one of the strongest job markets in history. Well, now it's been proven by the government's own numbers that the jobs market narrative was a farce to begin with. And it's not too much of a stretch to understand that the inflation getting back under control, the narrative is also just fake. It's based on fake data. The way that they calculate the CPI drastically understates true levels of inflation. That is why the methodology for calculating the CPI has been revised significantly since the early 1980s. If you still apply the old methodology, inflation today is like, 9-10%? You can see that over at shadowstats.com, John Williams' work. But inflation is very high. The economy is weak. And one thing that Powell has told us repeatedly in many of his recent talking points is that his shift is focusing more away from the Fed's inflation mandate and more towards job stability and maintaining full employment, the other half of their dual mandate. And so it's very likely that at Jackson Hole this Friday, we may hear a very dovish Powell. And if we do, I think that's going to be, very solid indicator for both gold and silver. And now Miguel Cordova in the chat here says something important. He says, don't go all in metal. Diversity is key. Yeah, I agree. I think it's important to diversify your holdings here. There's a lot of assets that are going to benefit from easier monetary policy over at the Fed, right? It's not just going to be gold and silver, although the nature of physical gold and silver you can hold in your hand outside of the financial system. I mean, I think that does mean you want to have some of that. None of this is financial advice, of course. But yeah, I mean, the stock market, asset bubbles, real estate, all of this stuff is going to be inflated to unbelievable levels. Because what you got to understand is the level of money printing that is going to be issued in by the Fed moving forward when it comes to light, just how weak this economy really is, and we're kind of getting a clue of that now, it's going to make people's heads spin. So, I mean, the amount of money that's going to need to be printed, it's going to dwarf previous easing, previous emergency interventions, the interventions that followed the great financial crisis and the pandemic. You're going to see money creation that makes all of that look like, child's play. And also, this is going to be an environment when inflation is already elevated. In both of those previous instances, inflation was low when the Fed began printing. So this time it's going to be way different. Now, another factor that is going to both drive higher debts and deficits and money printing, but also safe haven demand is the geopolitical situation playing out in the Middle East right now. So currently, the name of the game has been peace talks or ceasefire talks between Hamas and Israel, but Egypt and Qatar, who are sort of brokering that, acting as like a middleman during these negotiations, have now said that there is a little chance for Hamas to accept its new proposal, the U.S. and Israel's new proposal. They're not making enough concessions for what Hamas wants. They're not talking about a permanent ceasefire. It's like a 6-week ceasefire, I think is what's on the table. Hamas wants a complete end of the war. Israel wants different concessions. Look, I mean, I'm not coming out in favor of one side or the other. I think wars are bad. War's a problem. But it's not looking like this one's going to end anytime soon, is, the practical takeaway here, according to Egypt, again, who is sort of brokering this deal. So they have sort of an inside view of what is happening here, and the situation on the ground seems to confirm the idea that we're not that close to a ceasefire. You've got Hezbollah reportedly, as of this morning, launching 50 rockets at the annexed Golan Heights area. You've got Israel bombing arms depots in Lebanon earlier this morning, creating a number of secondary explosions as munitions are being destroyed. So, it's very much already a hot war between Hezbollah and Israel. And, one of the things that has really made these peace talks more critical than they otherwise would have been is this situation with Iran. So Iran, they've been touting this reprisal against Israel following the killing of Hamas leader Haniyeh in Tehran. But with these ceasefire talks on the table, they've sort of mitigated or delayed that reprisal, whatever the attack might be on Israel. This is something that we've been sort of watching play out over the past couple weeks. And this is from the Mehr news agency. I believe this is actually an Iranian news agency. And they say now that Iran is likely to respond to Israel through ground and air attacks. Now, they did say this is the UN mission from Iran. They said Iran's response should avoid a possible negative impact on a Gaza ceasefire. So if the ceasefire talks don't pan out, if they fall through, that may well be the cue for this long-awaited attack launched by Iran. And this UN agency, or this UN mission, now saying that maybe, this is their quote, maybe when their eyes are on the sky and the radar screen, they are surprised from the ground, and maybe a combination of the two. So hinting that perhaps the attack by Iran on Israel will encompass ground forces, ground incursions, maybe different than what we witnessed back in April. And, hopefully, again, cooler heads prevail, but it's not looking good. They always say, hope for the best, but prepare for the worst. So the worst case scenario here could be pretty bad, as the U.S. appears to be gearing up for strikes on Iran The region appears to be on the verge of being plunged into a regional conflict. The reason that the worst case scenario here is something that really could have a big impact on the entire global economy is because of the Strait of Hormuz, adjacent to Iran. Something like 20 to 30% of global oil production and natural gas production flows through this strait on a daily basis. If Iran shuts down the Strait of Hormuz, which they are very likely capable of doing through asymmetric tactics, artillery, missiles, mines, speedboats with explosive, all sorts of stuff, then the price of oil is going to skyrocket, and very likely commodities in general, the prices are going to skyrocket, and that means that inflation is going to be a huge problem. If the price of energy skyrockets, that could lead to a massive economic catastrophe around the world. Who knows what the fallout effects from that could be, but this is certainly a situation which could have some dire consequences for all the markets, and could have some really negative consequences for fiat currencies specifically, and the dollar around the world. So you got to do what you can to get prepared. Now, again, things to watch this week. Friday, 10 a.m., Fed Chair Jerome Powell will address the crowd there at Jackson Hole. If we get a very dovish Powell, well, that means that gold and silver are probably going to be catching a bid. It looks like right now, as we're doing this live stream, gold and silver actually at the highs of the day, both metals. So a very bullish setup here for gold and silver from both a fundamental standpoint and a technical standpoint, and from a standpoint of geopolitical tensions. Hopefully, cooler heads will prevail on that front. But again, I'm not telling you what I hope's going to happen. I'm just telling you what it looks likely may occur. So get prepared. It's going to be an interesting week. Certainly over this weekend, again, we're going to be having a lot of uncertainty between market close on Friday and market open on Sunday. A lot of things could happen. So leave me a comment down below to let me know what you think about the prospects for money creation as we head into this strange phase of the Fed cutting into an inflationary environment, and as we watch the economy continue to degenerate, to deteriorate before our very eyes. And as it turns out, much of the data that we've received over the past year plus, not accurate to begin with. So, I'm sure many of you saw that one coming, but that's not going to be the last revelation on this front. And as more data like this is released, I think that the appeal of safe haven assets is going to increase. So again, let me know what you think in the comments down below. Stay safe and happy stacking, everybody. Smart